All right. Hey, everyone. Let me just move this over here. All right. Mark here, Mark P. Markets. Thanks for joining me hold on. There we go. Thanks for joining me for another webinar workshop where I'm going to show you in this one how to day trade Bitcoin with candlestick patterns. Okay. Now, this is not exactly something for beginners. It's going to be a little bit more advanced because I never encourage beginners to start with day trades. All right. But if you're new and you kind of seem overwhelmed, either way, it will be good for you. It will be good to be exposed to this sort of thing so you have a better idea as to how it works. Of course, I have all my regulars in here. We'll say hello in a minute. But yes, I am streaming on YouTube. And I have my webinar running separately, which means if you can't stay for the whole session, the stream, once I conclude the stream, it will be available on YouTube, okay? So I'm not going to email this out to people. You can check my YouTube channel and you can find the webinar there. All right, so with that being said, let me get this thing started here because we have a lot to cover. All right, so first thing I'm gonna do is I'm gonna bring up my slides. All right, just give me a moment here. Okay, this should get my slides. There we go. Okay, let me move this over. And you guys should see that. Okay, cool. All right, now, again, welcome to the stream. By the way, if you're new to my channel, if you're new to the YouTube channel, do me a favor, press the like button. If you like the content, please subscribe to the channel. I am planning to bring in more content. In fact, that's one of my goals for this summer is to really get some more interesting and educational content onto the YouTube channel so that you guys can be better prepared to protect yourself in the most deceptive business in the world, which is what this is. Okay. So do me a favor and do that. Press the like, please subscribe. I appreciate that. All right. So other than that, let me get this thing going here. Okay. So welcome to how to use candlesticks to day trade Bitcoin. If you are new, we just went over that. Oh yeah. Let me go back to that. Hold on a second. Let me go back to that slide there. Can I go back up one? Yes, I can. I just have to read this. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. I am going to make my slides bigger here. Let me just give me a second. There we go. All right, that's what that slide says right there. All right, let's move on to the next slide. And let me get my little pointer up here. So if you guys are not familiar with me, my name is Mark Principato. I am a chartered market technician. All right, that's a professional title that you have to get from the Market Technicians Association, which is located in New York. And it's basically for professional analysts and traders. I've had this title for over 10 years now. I've worked for SMB Capital. If you're not familiar with them, Google them. I've also worked for Forex.com. I have been employed by these companies. All right. I'm not one of these phonies from TikTok that pretends to be a trader. I was in sales, though. I wasn't a trader for these companies. For SMB, actually, I was an educator. But anyway, you get the point. And recently, I've been selected as one of the 5 wizards on TradingView. There's only 5 of us, all right, on the entire platform, and I'm one of them, okay, for a regular like analysis type of stuff. They have Pine Script wizards also. I'm not one of those. Those are a separate thing. Those are like the data scientist guys. But the trader guys, you know, the analyst types, that's the kind of wizard that they chose. There's only 5 of us and I'm one of them. Okay. So that means something, but my magic spells, they still don't work. So I still need to I need some help on that. Anyway, I've been in this game for quite some time, 24 years. All right. So I've seen a lot of things and I can tell you that I'm an expert at one thing, and that is I know what does not work and I know it well. Anyway, let's move along. And let's see what else we got here. By the way, let me say hello to a few people. Okay, hold on. Before we get into what I'm going to talk about specifically. So we got Kai, good to see you. Stian, all right. Hey, Armin, Alex, all right. Isaac, good to see you all. Dom, how are you? All my regulars, great. Is there anyone here who is not a member of my community? Someone that's new, feel free to say hello and welcome. Also, if you want to share what city or what country you are from, that's always a fun fact. I'm streaming from the greater New York City area. also known as Northern New Jersey. So I do speak funny at times as a result, right? So you're just going to have to deal with that. Anyway, so in this webinar, what I am talking about here is, first, we're going to go over theory, because again, we need to understand how general market theory is going to affect how we come to the market as day traders. Again, I'm focused here on the day trade mindset. The second thing we're going to talk about is the day trade mindset and what that exactly means. A lot of beginners, they come to this game and they don't realize that a trade is not a trade. You can separate trade types by categories, right? A day trade is not the same as a swing trade. A swing trade is not the same as an investment. Each type of trade has its own particular mindset. You need to be familiar with this. We're going to go over that for day trades, okay? Then we're going to get into the candlesticks and how candlesticks can be very helpful on the day trade time frame if you understand what they're actually telling you and how to use them properly. All right. Now, there are dozens of candlestick patterns, by the way. You don't need to use most of them. Then we're going to talk about order placement, which is something that is underappreciated. People don't realize that order placement in and of itself is like a strategy or its own process. You should be familiar with that. And then I have a special offer. So for those of you that are not members of my community, I'll go over that if you stick around. I do have this thing called the trade scanner, and I talk about it all the time. We'll talk about it here briefly, but the trade scanner is basically a screener, right? And it produces text notifications in my Discord community. There are two particular channels that members have access to, right? Listen carefully, because people always ask me, what is a trade scanner? How does it work? There are two text channels in my Discord community. One is called Stock Trade Scanner, and the other one is called Cryptocurrency Trade Scanner. These are text channels. When a trade idea pops up as a result of my criteria, it produces a text notification in those channels. And it gives you basically a timestamp. It gives you a price at that timestamp. And it gives you a general instruction like, bullish reversal, look for longs on 1 hour or above. That's basically what the text notification says. So you now have a trade idea. And it's been very interesting. Some of these trade ideas that it's been calling, especially on the coins, these are things that I would never call. That's why I built these trade scanners with my personal criteria, because I can't sit there and watch the market all day long. And this thing has been doing some nice work and actually being able to provide my members with opportunities that we'd otherwise not get to participate in. All right, so we'll talk about that. Anyway, let's move along. By the way, if you guys have questions along the way here, feel free to ask. All right, I'm monitoring both the YouTube and the webinar section in here, so I can see both your questions. All right, so let's first get into the theory, shall we? Now, how many of you? Let me guys. Now, if you're a regular of mine, let someone new answer this question, okay? Because all the regulars know the answer. Are you familiar with the efficient markets hypothesis? Anyone? And again, regulars don't answer. Anyone new? Are you familiar with the efficient markets hypothesis? Yes or no? And you can also say, I don't know. I have no idea what that is. Never heard of it. That's okay. This is why we're going over this. This is probably one of the most important theories that you should have a good grasp on if you're going to attempt to risk money in financial markets. I cannot emphasize that enough. Now, by the way, fake gurus and frauds will never go over this theory with you because it refutes everything that they're trying to sell you. Okay? Keep that in mind. All right. So anyone want to answer that question? Here, I'm going to take myself off the screen here for a moment because you don't need to see my pretty face all the time. Anyone? No, I don't see any answers. You guys familiar? Because all my regulars know they want to say it and I'm telling them not to. All right. So if you're not, I'm going to take that as a no. Okay. So efficient markets hypothesis. This is what it is. And I'm going to explain in a moment why it's so important for day trades in particular. So it states that all the known information in the world is reflected in the current price. It also basically says that no one can beat the market in a consistent way over time. And it's because price is always at fair value. That's what it's stating. Now, keep in mind, this theory was developed in the 1960s. Now, there are three arguments or three forms of the theory. You don't need to know that, the detail of that, but the weakest form is called random walk. And random walk basically states that because all the information is baked into price at the moment, you can't forecast the future, and price will typically go forward in a random way. Okay. So that's very, very important. Now, I want you to think about something before I get into the assumption here. This was developed in the 1960s, and this was pretty much, there's a lot of holes that they poked in this thing because there's an assumption that investors are rational. That assumption is built into the theory. Now, as we all know, investors are not rational. But here's the point that I need to make about this. Efficient markets was a lot less relevant at a time when information moved a lot slower than it moves today. Think about it. In the 1960s, we had no mobile phones, we had no TikTok, we had no Twitter, we had nothing. We had telephones, newspapers, radios, and TVs. That is how information moved around the world, right? So if something, to even make a phone call to Australia was like a big project and it was expensive. Today, we can find out what's going on in any corner of the world instantly, and everyone can find this out very quickly. You just go to Twitter, okay, or whatever, right? You do something like that. So my point is, information, because it moves so fast today, it's made markets extremely efficient, which means they're harder and harder to beat, and they're more random. This is particularly important for smaller time frames. So why do I bring this up? Why is this so important as a day trader? Because you have to understand, you are playing a random game. I cannot emphasize that enough. How many people come to me and say, well, how do you know this? And how do you know that? And I think this, and I thought that. It's all irrelevant. You are playing a giant slot machine. Now, let me just bring up an analogy, and then I'm going to move along. When you go to a casino, now, first of all, when you walk into a casino, you do know that the house is there to win, right? And you know that you're going there for entertainment. You know that you pretty much are going to lose money. But hey, if you make money, cool, right? That's usually how you go into a casino, right? For most games, unless you're a poker player, but that's another story. So you go into the casino, it's entertainment, right? Now, you ever see the guys playing Baccarat? You ever see anyone familiar with that game, Baccarat? If you're not familiar, it's a dealer game. It's a dealer-based game, and it's an old game. And if you notice, right, and I love watching Baccarat players. I don't know how to play the game myself very well, but you have these guys that are playing this game, and the casino is very happy to supply them with paper and pencils so that they can chart the outcomes of the hands. It's a card game, so they're charting the outcomes of the hands, right? Now, think about this for a minute. As I mentioned before, when you walk into a casino, the casino is not there for you to win, right? So you're sitting at this Baccarat table, and the casino's like, sure, chart away, have fun. We hope you win. If there was any advantage to charting the outcomes of a Baccarat game, why would the casino help you do that when it's in their best interest for you to lose? Right? Think about that, because that same thought process is the same for this business. Anyone that's out to help you, we're going to give you this, we're going to give you that, we're going to give you this, we're going to give you some kind of advantage. Anyone that says that is lying to you, just like a casino gives you the little piece of paper and pencil. Why does the casino do that? Because they want to stimulate more betting, and they want you to be more confident, so you bet more money so that they win, because they know it's random. And the player's obviously ignorant. They don't know it's random, or they think they have some kind of advantage or something. If there truly was a mathematical advantage, the casino wouldn't do that, right? It's the same for this game, and it's all rooted in efficient markets. You can't beat a random market. I cannot emphasize this enough, and this is very important as a day trader. So when someone tells you, I have this magical formula, I have this magical tool, I have this platform, and it's going to do this for you, and it's going to do that for you, it's a lie. Because if they truly had that advantage, they wouldn't sell it to you, number one. Okay, because think about it, to market a product in a business, it's time consuming. It takes a lot of money, a lot of effort. Why would they go through all that headache when they can just use it themselves and make money like they claim. Number one. Number two, any type of advantage, if they're giving it away like that to the public, it will get arbitraged away. So if there was some sort of advantage, it would be gone if everyone finds out about it. Remember that I told you this, okay? Let's move along here. Let me know if you have any questions about that. All right, so that's efficient markets hypothesis, all right? So again, this is getting more and more true as time goes on because information is not moving slower and it's only going to move faster in the future. All right, let's move along. And let me change my slide here. So inefficiencies. Inefficiencies are where money comes from. What I just described to you about a fraud or a fake guru giving you some kind of special tool, basically what they're trying to tell you is that they're giving you some sort of advantage. An advantage means that you're exploiting some type of inefficiency, whether you know that or not. Now, there are two types of inefficiencies. There is the physical inefficiency, and an example of that is something like speed of order flow. That's a microstructure game. That's something that the retail trader has no access to. All right, you need to be an institution. You need to be like a PhD in physics. You need to be Sam Bankman-Fried working for MIT. Like that's who plays that game. All right, so you can't play that game. Don't even think about it. You also have to have political connections. But that's the physical inefficiency game. And it's extremely competitive. And you're dealing with the brightest minds in the world. As retail traders, we have to look at the behavioral inefficiencies. And this is basically where we're gauging human behavior as it's reflected in price action. This is where candlesticks shine very well. That's why I'm talking about this here. So the behavioral inefficiencies are things like trends. And that's the first, as a beginner, that's one of the first things you come across. They say, oh, trend is your friend. Learn how to trade the trend, blah, 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 blah. Trend is basically an imbalance of order flow. So that is a behavioral inefficiency. And these things tend to be temporary. So you need to realize that. And that's what forces you, when you realize that these things are temporary, you then start to look at the market in terms of probabilities, and you learn to recognize that these things aren't going to be around for long. So you capitalize on them when you can, and you take your money. This is why you don't have opinions, particularly as a day trader. I tell people all the time, they come to me, they ask me, what do you think of this? What do you think this is going to go? I have no clue because I don't have opinions. Okay, the market tells me what to think, and I work with that information. The market changes, I adjust to the new information. You cannot forecast the future more than maybe a week or two out. There's no way to know where a market is going to be in 3 months because things change, right? Some news comes out that no one was expecting, blah, blah, blah. People that claim to be right, they're right randomly. Frauds take advantage of the random thing all day long, and they trick you. Anyway, okay, next. Overreactions. That's the other behavioral inefficiency, particularly one that I look for. So what's an overreaction? Something like a failed low, failed high, something like where people get faked out or everyone piles in on the wrong side because they don't understand what's going on. They're typically reacting to information. Meanwhile, they're missing the context of what they're reacting into. And often there are opportunities in those areas, high probability opportunities. Now, high probability doesn't mean 99% win rate. That's a scam, by the way. Okay, anyone that tells you that they have some sort of 99% win rate, blah, blah, blah. Win rates they fluctuate over time. It depends on the environment. But if you have something that shows you maybe, you can estimate a 65, 70% chance probability, then chances are this trade is more likely to be a winner, but it may not be. There's still a 30% chance that it will fail. So that's why you have to have good risk management. Anyway, we're playing a random game, and in order to thrive in a random game, you need to understand the market in probabilities, particularly on the short term. Now let's move along. We talked about efficient markets. We talked about inefficiencies, which is where money comes from. All right, let me know if you guys have any questions. Next, mindset. So the day trade mindset, like I explained before, is not the same as swing trade. It's not the same as investing. The day trade mindset is is like, you really have to be very strict. You cannot have any opinions on anything, because intraday, for one, you're going to be looking at charts, maybe 5 minute, 15 minute, maybe 30 minute, right? Those are typical day trade timeframes. 1 minute, it could be bullish, and then some news comes out, and next thing you know, all the levels that you thought are broken through, and now it's a bearish day, right? This kind of thing happens all the time because of the highly random nature. Often, when there are large reactions intraday, often those reactions are coincide with a level on a larger time frame. So as a day trader, you need to be aware of what's going on around you, and you need to also recognize the limitations of the time frame you're within. That's what the mindset is all about. So let's talk a little bit about what you need to thrive in a random environment. And these are the things that I use right here. So I have a decision routine, and you need a routine. It has to be whenever you're looking for trades or trade ideas, or maybe you're onto potential opportunity development. The way you judge these ideas has to be exactly the same every single time. You can't sit there and be like, well, I think this, or oh, this guy said that, or oh, these guys are going long. No, you have to have a preset criteria. And when the criteria is met, then that's your analytical component, right? The analytics component that I'm pointing to here, that tells you where you should be going long, you should be going short, or the market's in a range. And it's making these judgments using the same measurements or same variables every single time. This reason right here alone is why I built my trade scanner, because it's very hard for me to sit in front of a screen and watch this stuff all day and make calls and this and that. So I programmed my criteria into a screener, and that's what became the trade scanner. So the analytics component for me is a lot easier because it's automated. Right? I've outsourced it to a robot. Anyway, after you have that, okay, I know I should go long, I know I should go short. Then you actually have the trade criteria, which is your setup. Okay, certain things line up. That could be many things. Doesn't have to be the same things that I use, but for example, it could be a moving average crossover on a smaller time frame. I'm not saying that that's a good thing. I'm saying that's just an example of trade criteria. Now, from that, your setup develops, but you have to look at your setup in the eyes of context. You can't, like a robot can't always do that. You do have to be able to see context to better judge that setup. I go through this with my members all the time. They'll say, is Bitcoin a short if it breaks this level? Like I had a question the other day, is Bitcoin a short if it breaks 25K? And I said, not necessarily, because you're sitting at a support it's a broader support in a larger, broader bullish trend. I don't exactly want to be thinking long-term short at such a location. That's context, which that means that if I'm going to short Bitcoin in a situation like that, I should be thinking of day trades, okay? Not swing trades. All right, anyway, I don't want to confuse you. So you have the trade criteria. Once it lines up and you say, okay, I'm looking, here's my long setup, then you need confirmation. Confirmation can be a lot of things, but I like to use candlesticks. Candlesticks shine really well here when it comes to confirmation. And this is actually part of my training program. So you notice here, these are three separate components that you need to have a robust and adequate day trade decision-making system, whether it's automated or not, right? You need to have this criteria. If you don't, your chances of showing any type of consistency are extremely low. And I'm not just saying that. That's the experience that I've had. And trust me, like I said before, I know everything that doesn't work, because I've spent years wasting my time doing things because I believed in some lie or some dream. Anyway, so you have confirmation, which can come from candlesticks, which I'm about to show you. And then once you have that, then comes the order placement process, or the order placement component. Most people underappreciate the order placement part. But as I tell my members and I tell my followers, the outcome of the trade is not a result of the win rate. It's a result of your trade management, and that comes from order placement, right? There's many times, for example, when the trade scanner will generate a long, right? It generates a long signal, and the trade is worth something. It goes green for maybe a couple of 4-hour bars or whatever, and then it turns around and stops out. That green was worth something. There was some value in there. And how you manage your orders and how you adjust to that information is going to determine, or better determine, if you're able to capitalize on that very temporary green, or if you stayed in the trade because you hoped and it went straight to the stop. So one guy books a win, the other guy stops out. No, this thing sucks. Well, no, you don't understand how to adjust to new information is usually what the problem is, okay? We can't depend on robots, especially something like this, because markets are highly random. So if it delivers the green, you do something with that. All right, anyway, so these are the components that you have to have as a day trader if you want to have any chance. And we're talking about, it doesn't matter the market. It could be stocks, it could be Bitcoin, it could be Forex. It doesn't matter. The market. Day trade mindset is the day trade mindset. Any questions so far? Let me know. Let me know in the chat. All right, so let's move along. Let's get into the candlestick patterns. So I just finished telling you about these components that you need that make up a system for your decision making, right? Within the day trade mindset. Candlesticks, in and of themselves, serve as a good way to confirm a signal and set up orders as a result of it. But here's what you need to understand about candlesticks. First of all, they can appear randomly. Remember that word random from earlier? Candlesticks, whether it's a one-stick pattern, two-stick pattern, whatever, they can appear randomly at any location on a chart. So what gives a candlestick value is the context. Where is this candlestick pattern appearing? Is it a higher low support in a broader bullish trend? Or is it a lower low in a trend that may be changing, right? Even though it's a bullish reversal, the one is not equal to the other. Although the market may bounce off of both of those examples, the expectations of that bounce should not be the same based on what the price structure in general implies. Does that make sense to you guys? So let's talk about my favorite candlestick pattern. And that is what? Who wants to tell me what this is? I know my regulars know. Who wants to tell me what this is? I'll let you my regulars answer this question. You guys should know. What is this? Let's see what you guys say. What candlestick pattern is this? I'm gonna talk about it in more detail here and what it means and what's going on. This is the blueprint of the candlestick pattern. This is one of the only candlestick patterns that you need to know. There are dozens of candlestick patterns, right? There's maybe like 50 of them. Pin bar, Dom's got it. Pin bar, yes, and you used the right terminology. Hammer, okay, see, there we go. Mirjan, Steen, pin bar, hammer. Now, so I was waiting for someone to say that. The hammer is the correct term. It's not an incorrect term, but I don't like to use hammer. Okay, it could be a hammer, right? That's the specific term, right, given to these things by Steve Neeson, who's the guy that basically brought these candlesticks to the West in the 90s. So the official name is a hammer, right? And this could also be an inverted hammer. This also has its own names, right? But my thing is, don't get mixed up by those names. They can be confusing, right? Instead, you want to basically know these patterns based on where they appear. Let me first talk a little bit about the psychology behind this hammer, or bullish pin bar, like I like to call it. These single candle patterns are specifically reversal patterns, right? So they realized that at one point, the open to the close filled up the entire bar. And by the time the bar closes, the open to the close is only 1/3 of the entire range. That's the typical characteristic, right? Now, if you go by the official definition, like a hammer, for example, is not supposed to have anything above it. It's supposed to be just flat, right? There's supposed to be nothing up there. But a pin bar is imperfect. A pin bar, it's the idea, right? So it doesn't matter if there's something up here or not. There might be, there might not be, okay? Same at the bottom here. You guys follow that? That's why I don't want you to get too caught up on the official. I want you to understand the general idea. So they are imperfect, right? The key thing with these hammers or reversal, pin bar, bullish pin bars, is the location, or the bearish pin bar, as this one would be, right? A bearish pin bar. So what's happening is, like I said, at one point, the candle, this candle, it could be red or green. It doesn't matter the color of the candle. At one point, it was full, and then it reversed, which means order flow came in and absorbed the selling orders, which is what was pushing this thing to the low of the candle. And the candle then closes like this. It's very important that you pay attention to the close. This could be a 4-hour candle, which means you have to wait 4 hours for this thing to close, right? This could be a 5-minute candle. But realize that the larger the time frame, the more weight that it carries. If you see a 5-minute pin bar, okay, that may be meaningful for a day trade, which is what we're here to talk about. But if you're looking at a 4-hour candle that looks like this, or a daily candle that looks like this, that carries a lot of weight. That's a very heavy magnitude. That means a lot of volume had to occur in order for it to reverse off that low and close like this, right? So these are very easy to spot on a chart. And a lot of times when there's follow through, you can get some high probability trades off of these single and simple reversal patterns. Okay, there are other patterns in the reversal category as well, but I like this one the most. All right, and I often call out pin bars. These are great patterns, but you don't take all of them, and don't go to a 1-minute chart and be like, oh, I see one here and I see one here. After the fact, sure, they look great, but we'll find ones that don't work. Again, same with the bearish side. At one point, this thing was full, right, and then some selling activity came in, and the candle closed with a long tail above it. Okay, that is a bearish reversal pin bar. Now, when you're dealing with these pin bars, just because you get the candle and just because it closes, it's still not, you don't just jump in. You have to wait till the high or the low is taken out. Okay, you guys clear on that? So you're not just looking for the appearance of the candle. The market now has to follow through. But when the candle closes, this is when we can place our orders. All right, so let me go to now an example. That's why I brought my charts up here. Let me pull my charts up. Okay, hold on a second. And we can take a look here. This is my Bitcoin chart, and this is a daily chart. Okay, let's see if we can find some examples. Actually, we don't need this here. This is an old analysis, which the market never actually realized. Let's find some examples. Let's find one example. There's so many I could spot. I see so many. Like, I'm looking at this just for a minute, and I see, look, bearish pin bar. Okay, look over here, right? Bullish pin bar. Okay, how about over here? Bearish pin bar. Okay, now I'm picking out some pin bars here. We can actually, we don't need the ATR on this thing right now. Let's move that off for now. We'll get back to the ATR in a moment. But I'm pointing out these pin bars because you can spot them all over the place. So let's pick some pin bars that really never delivered anything, right? There's a pin bar right there. Okay, now this is daily. Here's another pin bar right here, right? So now watch this. If you notice on this chart, what you're looking for are pin bars that occur at certain levels, right? If we go back, right, this area over here, that's a resistance, right? We could have notated that resistance from back here, right? This area, it was a notable resistance, and that's where it's marked from, right? But that support and resistance, that's my previous webinar. If you haven't seen that one, I sent out an email with that link. Anyway, so when you have something like a bearish pin bar develop off of such a location, that's a high probability pin bar. Now, I'm just showing you a quick example for context with the bigger picture. Let's go to a 5-minute chart, because if you're going to day trade, right, that's what you're going to be looking at, a 5-minute chart. And let's make this, I'm sorry, that's wrong. Here's a 5-minute chart, and let me clean up the chart here so we can see what we're looking at. All right. By the way, we had the FOMC meeting today. Interesting 15 minutes. All right. I haven't seen where the NASDAQ is yet, but anyway. So here's a 5-minute chart. This is the time frame that you would be applying this to. Okay, this pin bar idea. Now let's just pick out some pin bars. Look, bullish pin bar. That one, if you went long that one wasn't working very well. Another couple of bullish pin bars. Right? Look at that. And it sold off, right? Bullish pin bar right here. Okay. You can do this exercise on your charts too. Look, bullish pin bar. They appear randomly. Bearish pin bar. Okay, you guys following me? So what makes these valid is really their location. That's how you're going to judge them. So now let me give you an example. And they're not going to give you 100% trades. Realize there's no such thing. They are just a reference point. And they're great. Like if you're short and you see a bullish pin bar develop, for example, you're like, I probably shouldn't stay short if that pin bar high is taken out, right? So look at this. I mean, this was worth something, okay, over here. See this? Off of this pin bar. But now, why would you take something like that, right? What is there a level here? There may be. I don't know. I'd have to do some more analysis on this. There probably is a level around. Yeah, see, look, there is a level there. Okay, so level, pin bar, great. A couple of criteria lined up. It was worth something. But if you stayed in that trade because, you know, greed stepped in and you think you're cool and you think you have this all figured out and you don't realize you're going into an FOMC meeting, you get caught, right? This right here, this movement right here, that bearish movement, oh, these pin bars, they suck. They don't work. Look, I mean, I got long over here and this thing just totally felt, you know, it collapsed on me. Well, no, you went into the FOMC meeting long, right? Really bad idea. It doesn't matter what pattern shows up before it. It could have worked out your way if the FOMC came out favorable, but you're taking a very big chance. It's random, like I said before, because no one knows the outcome of the meeting. So just because you get a pin bar doesn't mean you have a guaranteed trade. Make sure that you understand that. It's very important, okay? So do we have any pin bars here on the bottom of this move? No. Now look at this. You have a long tail, okay, at the bottom of this candle. See that? But that's not a pin bar because we don't have the open to the close is not 1/3 of the candle. It's like half the candle. So that's not really going to be a good choice. That's not going to be a good example of a pin bar and a reversal pin bar. So you can't make stuff up here. It has to fit the criteria. Okay. Realize at one point people were banging this thing out at the bottom, right? See that? So, and it looks like we have an inside bar and we're going to take out that low. This is a 5-minute chart. So you're thinking the day trade time frame. Now that's great that we have a way to come up with, you know, a way to enter a trade, right? So we have, you know, you have your system to determine if you should go long or short. You get a pin bar, okay? You have your high and your low of the pin bar. You're looking for a long, so you know you should not be going short here, right? I'm just setting up an example, even though we know eventually it's sold off. Let's say we don't know that, okay? And you need a way to come up with these orders. Now, when it comes to day trades, sometimes you don't have much time. The thing closes, it takes out that high, you pretty much have to be in it, right? So you have to place a market order. Like I said, that's more advanced. But when it comes to swing trades and things like that, you have plenty of time. So how do you come up with these orders? How do you know where to enter, right? It's going to be the high of the pin bar, and the stop should be somewhere below the low, right? But if you don't have the time to be fumbling around, how can you come up with a way to set up these orders instantly? Also, not only the entry and the stop, but what about the take profit? Like, how do you know where to get out? Well, that's what the ATR is for, okay? That's a method that I've been showing people. You can use that to come up with these instant orders, and it can be particularly helpful for day trades. Let's move on to that, okay? Let me show you guys what I'm talking about. And let me know if you guys have any questions about that so far. Okay, so back to my slides. Hold on a second, you guys. Back to my slides. All right, so we all clear on that pin bar stuff? Let's move along. Now, I showed you my example. Let's talk about order placement. So like I said before, we have that component where we figured out if we want to go long or short. Then we have our criteria for the setup, right? We have our location. We want to see a bullish reversal in this area. We're anticipating this. This is very important no matter what type of trader you are. Then you have your setup. Okay, I got the pin bar, bullish pin bar. It's there. Now I'm waiting for that thing to close. It closes. Great. What do I do now? How do I come up with these orders? And how can I come up with these orders in a routine way? So I'm doing it the same every time. Like I always tell people, the more you can remove yourself from the equation, the better. I cannot emphasize that enough because no matter what, even me, I have a lot of experience and I still get caught up in situations at times where emotions can play a role or I do something stupid. Like, what was I thinking, right? Even me. So I've learned that the best thing to do is have a routine way for everything so that you have very little say in the overall decision-making process. It's mostly the market doing this work for you, and you're just following signals that the market gives you. You don't sit there and say, well, I think this. That's the worst thing you can do. All right, so let's talk about order placement. The average true range is what I use to come up with stop loss orders and take profits. And I've been using this. We've been using this for swing trades as well. In fact, Steve and another guy, they're trying to help me come up with a way so that we can measure all of our trade scanner trades and automatically record the performance using this technique here. But the ATR stands for average true range. You can find this, it's not an oscillator. You can find this tool on any charting platform. And what it is actually is a moving average of the highs and lows of price over time. And the reason why this is useful is because it's market relevant. It's not something you're just coming up with in an anecdotal way. It has some sort of statistical relevance. Now, let me bring up an example here of the ATR on my chart. Let me just pull back my chart here. And the ATR that I had before here, we're going to pull that right back up. It's right on the bottom here. Where is that thing? Right, ATR right here. And I can bring that back up if I just press this button right here. All right, so there is the ATR, right? Average true range. It's this little graph on the bottom of the chart. I'll make it bigger. Can I make it bigger? Yes. No, that's the chart. Okay. Let me just make the ATR bigger here so you guys can see it. All right, so that's the average true range. It's a moving average of price, the highs and lows of the price over some period. In this case, 14 periods, right? So if we go back 14 bars, the ATR is measuring the average range. Now, of course, going into that, right, these candles were much more narrow than these candles, and that's why you see this jump. Does that really mean anything? No. Don't get caught up with the historical behavior of the average true range. That's not what we're looking for. All we are interested in is what the value is right now. And you can find that by just looking over here. Okay. You guys can't, you guys should be able to see that. Can I draw a square on there? No. Oh yeah, I can. All right. That's your average true range right there. So it's a little number. Now on the 5-minute chart, it's going to be a pretty relatively small number. On this 5-minute chart, it's 75.91, right? Or basically 76.26 it says there right now. That's 76 points on a 5-minute chart. If we go to a daily chart, all right, that number is 833 points. So it's just a larger magnitude. So which ATR you use is going to depend on the strategy you're employing. If you're looking at day trades, obviously you're going to be using the ATR on a 5-minute chart or whatever time frame you're taking that trade on, because your risk and reward, or your profit and your take profit and your stop loss, are going to be relevant to this number. All right, so that's where you find it. Now let me show you, let's go back to our 5-minute chart, because that's basically what we're interested in here, right? Because we're looking for day trades. So now let me give you a little formula. Let me go back to my slides so you can see what I'm talking about. So this formula right here is what helps you arrive at instant orders without having to fumble around and waste time doing analysis on your chart. You've figured out which way you want to go, but you don't want to waste any time. Where should I put my stop? People put it too tight. People put it at anecdotal levels because, oh, I don't feel like risking this. I'm just going to put it here, right? No. Use something like this because it gives you a routine. Now, here's how it works. So for day trade time frames, in this example, I have a 15-minute, right? 15-minute chart. You basically take that ATR. You should round the ATR to the nearest whole number, which I don't have that written here. But for example, with that Bitcoin one, 75 points, just round it straight to 100. Okay. So now you're working with 100. Never round lower, always round higher. Give the market more room. So you multiply that times 3, right? 100 times 3. That gives you your risk. That's 300 points of risk. Okay. On your 5-minute chart, 300 points. And then for your take profit, you multiply that number, which is 100. You multiply it by 4. Now you have 400 points. So now what do? Let's go back to the chart. And let me just put this on the chart. In fact, what I'm going to do here is, instead of using Bitcoin as an example, let's go to XRP, because XRP is a trade that the trade scanner called on Friday. I think it was Friday. All right. and it called it long. Now, of course, it's not a long anymore, but the trade scanner called XRP long, and XRP is not something I would trade. All right, I normally don't trade that, but it called it long around here somewhere, right? I'm sorry, this is a 5-minute chart. Let's go to the 4-hour chart because I have to show this example as a swing trade because that's how it was called. Okay, so let me go back here a bit, and that was back here. Okay, yeah, it was around here, June 10th, around there, June 10th. I believe that was no, I'm sorry, is that the right trade? Or was it the 12th? It might have been the 12th. Maybe you guys can confirm that. I can't remember. I believe it was here, right? I believe that's where the trade was called on the 4-hour chart, right? Which is Saturday the 10th. I believe this is where it was called, right here. Okay. So when the trade is called and you get the notification, what do we do with that ATR? Let me show you the ATR process. So at the time that this thing was called, my ATR at the time was 01, it's 0.01249, right? So basically I can round that to basically what, 0.13, right? And then I can from there, I want to multiply that number, right? For this time frame would be times 2. If you look at my formula before, a 4-hour chart, you want to multiply that times 2. And if we multiply that number, right, what was it, 1250? So we'll say 13. So we'll say 26, right? 026, I believe the number would be. Let me see if I can put that on the chart here. That would be somewhere. No, that's not making sense. Okay. I'd have to multiply that number. Anyway, it would look something like this. I'm going to give you an idea. The stop would be like something like that. Okay. Because it's based on this candle here. Your entry would be this candle right here, this little green candle. The high there is 5118, right? So you would subtract your 0.026, right? And that would give you something like a 0.25 or something like that. I'm getting mixed up with the numbers. Maybe someone I need a calculator for that, but it'd be something like this. Okay, it'd be something like this. And maybe someone who actually took this trade can tell me what day trade numbers are used. And your take profit would be 1.5 times that, right? So typically it looks like this, right? This area is smaller than this area, right? In terms of from the entry price. That's typically what it looks like. And the idea is to have a 1.5 to 1 reward risk ratio, no matter what, right? So that's why, let me go back to my screen here. Let me go back to this. That's why if you're working with a 15-minute chart, for example, you want to multiply that ATR by 3 and you want to multiply it by 4 for your take profit. On a 4-hour, you multiply it by 2, right? And you multiply by 3 for your take profit. Again, you're multiplying the ATR. And then you're going to add that number to your entry. You're going to subtract that number from your entry for your risk. This reward ratio is 1.5 to 1, right? The risk reward ratio, no matter which one you use. If you're using a daily chart, you multiply times 1, okay? And you multiply times 1.5, and that gives you your 1.5 to 1 reward risk ratio. So that's all you're doing here. Now, again, the reason why this is relevant is because it's statistically relevant to the market. You're not just coming up with some made up numbers here, right? It's based on the average true range or the movements of 14 candles that it's measuring, the highs and the lows of those previous candles. So that's the point that I'm trying to make here without getting too complicated. Does that make sense, you guys? You guys have any questions about that? So let's move on to the next slide. Let me know if you're confused by that. So I showed you the ATR graph on the chart. Right now, let me ask you guys, or let me recap this here real quick. What you've learned so far about using candlesticks to day trade. As you've learned that you need an analytical component, right? And you need trade criteria in order to arrive at a trade idea, no matter what market you're in. Then you can use the pin bars for a form of confirmation. You wait for the pin bar to close, and now you have the high of the pin bar, or it depends on whether it's bullish or bearish, but if it's bullish, you have the high of the pin bar, right? That's going to be your entry. And then somewhere below that pin bar is going to be your stop. And that somewhere is going to be based on the ATR. And your take profit is going to also be based on the ATR. And that routine is going to give you the same, it's going to give you the same reasoning and the same process for every trade you take. That's also a great way. It's a great routine to have, because when you measure performance, you know that you're taking the same trades for the same reasons. You know, a lot of times they say, well, you have to write a journal and blah, blah, blah. If you're not taking trades for the same reasons, it's hard to pinpoint what you're doing. Okay. So when you have all this stuff and you've arrived at your trade idea and you've used your ATR, like I just showed you, you can then place your stop, your entry, your stop, and your take profit, and you're done. Right. It's a little bit of an involved process. You guys have any questions about that? Because what I want to show you next is, what if I can basically reduce the workload for you, right? And instead of having to do the analysis and have all that stuff, all you have to do is wait for the notification. And then once you get it, you place your entry, your stop loss, and you take profit, right? And stop sitting in front of a computer. I don't know if people realize this, but you know, the days of sitting in front of a computer waiting for setups is so antiquated. I spent many, many years doing this. And I used to be like, man, this is such a waste of time, because you're waiting for this setup. Maybe you get bored. Maybe you start doing something else. You miss the move that you were waiting for. If you're waiting for a particular move, you start making stuff up. Even worse, if the market goes against you and you take a loss, now you want to try to make that money back because you've invested all this time sitting there all day, right? Stop sitting in front of your computer. Have something like a screener work for you. Okay? And that's why I put together the trade scanner, right? The trade scanner, basically, it's automated trade setups. I used to call this thing auto setups. And people were like, what is an auto setup? Does it have to do with a car? No. So I renamed it trade scanner, because basically what this thing is doing is it's looking for trades based on certain criteria, and it scans certain markets, right? So for example, my cryptocurrency trade scanner looks at the top 10 most capitalized coins, and that's all it scans. So that's why you won't see any of these dopey little like PP coin. You'll never see that show up on the trade scanner, because it's not looking at those coins. It's only looking at the most capitalized. My stock trade scanner looks at a certain range of stocks within a certain price range and a couple of other criteria, but it's not looking at the entire stock market. So it kind of narrows your range into areas or pockets of the market where there may be greater opportunity. Another interesting thing about my scanner I've been noticing is the stock scanner in particular, it'll paint walls of like bullish or bearish trades. Like it'll pull up 15 or 20 stocks. It'll say bearish reversal, and it'll give you like a list of 20 stocks. You're not looking to trade 20 stocks. You're just looking for one. And the great thing about it is day trades work very well with this thing. My trade scanner was not meant for day trades. I meant it for swing trades. But it turns out it works very well because, you know, it's looking for larger magnitude changes in the market. And when you work on a smaller time frame in light of that larger magnitude change, there's still something left. There's some momentum left on that smaller time frame. So it does work very well for day trades. Now, I'm not telling you you want to use that only for day trades, because there are times when it works very well for swing trades. But I've been noticing, and a lot of guys have been taking trades on these things, right? Like Steen and a few other guys, and they've been reporting some interesting results taking day trades using the scanner. All right. So let me show you some examples here. This is a list of stocks, right? I asked one of my guys, I said, just pick randomly select 10 stocks from the scanner and just show the results on a table. So, and he wasn't even using the ATR method for this. He just used the 2% reward risk. And this is what came about, right? So, I mean, look at this. This is basically what? How many trades are green here? 4, 6, and there are 2 red trades, right? This actually, if you add this up, it actually came out to a positive result. Now, I'm not saying that this is a reflection of the win rate and that this thing is, you know, some kind of amazing magical tool. I just told you before, there is no such thing. In fact, let me make this bigger so you guys can see it. Look, so this again was just 10 randomly selected trades over from, I think, from March to April. And my point is, there are opportunities in here that you'd otherwise not know of, because the scanner, which is the analytical component that I talked about earlier, is always following the same rules. It's always following the same setups. So it's going to produce the same results every time. It's going to find things for the same reasons. It's taking all that work off your hands. All you have to do is get the notification, right? And I tell my guys, set push notifications. Make sure you set push notifications, right? And you get the thing on your phone, and now you have an idea that you can work with. Whether you want to work with that as a day trade or a swing trade is going to be up to you. Like I said before, the outcome of the scanner is really a function of trade management, not the win rate of the scanner itself. Although we are working to really measure the results of this thing if you followed it blindly. But I do not suggest following it blindly. I suggest following it proactively. You get the idea, you evaluate the idea somewhat, right? Like if it's a stock, the stocks require a little more work. Like, for example, you should be aware if a stock has a quarterly report in the next couple of days, if you're going to take a trade in a stock, because that quarterly report can change things dramatically compared to something like an altcoin, right? Altcoins don't have quarterly reports. So the stocks, you need to be a little more aware of a couple of things. The robot can't do that part for you, but really it takes a lot off your plate, and all you have to do is set the orders using the ATR method like I showed you. Now, if you're interested in getting the trade scanner, you just have to be a member of my community, okay? The trade scanner is available in my Discord community. Like I said, there are 2 channels there where these text notifications pop up. So when you become a member, and I have a few membership levels, I'll show you in a moment, you have the stock trade scanner, right? You have the cryptocurrencies trade scanner. You have this market updates channel. This is something new that I just actually implemented, where I haven't put any videos in there yet, but each week I'm going to put a couple of market update videos, like a 5-minute video that I'm going to put together. So a brief overview of the market, so you have some context. You know, if there's like a quiet market or a strange thing going on, I can at least highlight that real quick, and you can watch it at your convenience. So this is a new, value add that I just put in there. And over the next week, I'm hoping I can get one of these out tomorrow. But next week, you'll start to see these pop up at least once or twice per week. And that's in its own channel. So all members will have access to that. All right. Then there's the active investor options channel. So I have a guy, moderator. He calls options trades all day. And there's some good trades in there. If you don't know options, okay, it's no problem. You can still learn stuff. But if you are familiar with options, you have that also. That comes along with this, okay, whether you want to use it or not. Then I have my monthly student meetings. So every month I have a meeting where me and my member, most of the people here have been to one of my meetings. We get together each month. It's a private meeting, and we review either questions from the training program, or I teach people more about the trade scanner, how to use it, how to set these ATR orders. We go over specific examples. In fact, in my previous meeting, which was May 31st or whatever, we were in the middle of a meeting and the trade scanner popped up a trade idea. I believe it was Litecoin long, I think it was. And we were all in the middle of the meeting. This thing popped up and we said, okay, let's put this trade idea together. And the trade idea worked out very well. A number of people were present that are here now, were present from that meeting. I think Steen, a few other people, and also some of my members here. If you want to share just some of your experience that you've had in my community, I mean, half of you here are members, are paid members. So you guys can tell me. I mean, the fact that they're here is a testimonial. Otherwise, if they thought this had no value, they wouldn't be wasting their time here right now. So that's a testimonial in and of itself. But my point is, these meetings are very valuable. And I just set up an archive. So, and I filled it up with some meetings, right? I just missed one. But you can go back and watch the previous meetings if you're a member. So any new member, I missed, and when's the next meeting? The next meeting is going to be in the 4th week of June. But if you want to see May, or I have to put May in there, but if you want to see April, March, February, it's all in there. So that's what, 4 hours worth of meetings that you can go over if you want to. All right. And then of course, there's the training program. This is a 16-day video training program where I teach you how to look at the market more objectively and what carries value. In fact, here, let me show this to you right here. I have an example here. Let me pull this up. Let me just pull this out. I'll show you what you're actually dealing with. Is it this one? Yeah, it's this one. with the training program. This is my training program. All right. It's on markpremarkets.com. Now it's 90 minutes of training program, or 1.5 hours. And there's training assignments. And 90 minutes. That's nothing. There's no fluff. It's straight to the point. If you want to see the curriculum, this is it right here. Okay. You can actually see the curriculum, what the training program goes over, and it's delivered over a 16-day period. So really, it's not time consuming. The most valuable part of this program, of course, is the assignments, right? That's really the exercises that I have you do. And a lot of people, before they get into it, they're like, oh, that's too simple, right? But simplicity is the key. I'm focusing you in on the information that carries the most weight from what I've learned, from all the experience that I have. Now, why I'm showing this to you is because this, let me go back to my slides here. Why I'm showing this to you is because this training program is now part of my active investor monthly package. Okay, this is a new thing. I've never had this part of my monthly package. Usually you had to pay 6 months or a year in advance, but it's part of the monthly package as well. I'm trying to consolidate my product offering to just make it simpler and easier and add more value for everyone, right? So that's what you're getting as a membership. Here are the prices. Now, if you've stuck around this long and you're interested in this, please take advantage of this, because I only offer this when I do a webinar. And I don't know if I'm going to offer this on the next one, but if you go to my pricing page and you use coupon code webinar10, you get 10% off. Now, the biggest bang for that buck is if you go to the active investor yearly package, right? It's instead of $675, right? You're saving yourself $75. You realize at $675, that comes to $56.25 per month, okay? A year in advance. So that's a pretty good deal, but you're getting it for even less if you go for the coupon code, okay? Same with the active investor 6 month. This is the price you're getting, which is obviously cheaper than $69 a month, which is what that is at the full price. And the monthly, for the first month, you get $9 off, okay? That's the monthly, month to month, okay? So those are your choices. Now, let me show you something. If you're interested in this, you go to this page right here, right? bit.ly and then /buy signals. And if you go there, that's going to take you to this page right here. That's going to take you to a page that looks like this, right? That is my page. I know it looks a little funky. I'm working to improve this, but this is what the page looks like. And if you want one of these packages, here are the packages that I just described inside of these little boxes. And you can click on show more, right? And that'll show you what you're getting. All right, that just explains it in more detail if you want to see that. All right, and if you want to actually make the payment, you have to click on this upgrade button, right? You click on this upgrade button right here. Here, we'll close that up. And if you click on the upgrade button, it's going to bring up a page like this. You have to be logged in to your Discord account. If you don't have a Discord account, you have to sign up for one. They're free, right? You just sign up. That's the platform that I'm using to deliver the trade notifications and stuff like that through the channel. So you have to have a Discord membership, and you have to log into it in order to complete this payment. I just want to make sure that that's clear. I know there's a lot of hoops you have to jump through, but let me tell you, it's worth it. Okay. Hey, you know about prop firms, Izzy? I sure do. And I don't really have high opinions of them. I want to make a video about what I about my opinion on prop firms, and I'll answer that question in a moment. So guys, do you have any questions about what I've gone over here? Anything you'd like to say? Any of my current members, is there anything that you'd like to say about your experience so far? That's always helpful. Here, let me just change this over here so you can see my pretty face. Anyone want to share your experience so far? Your experience with the trade scanner, so just people can see. I mean, that there's no better testimonial than people that are in the program and how they feel about it. I mean, like the fact that they're here, like I said, is a testimonial in and of themselves. You didn't start yet, but I think the portfolio advice that you will make for more substantial value than you're offering. Oh, thank you, Isaac. He's talking about the aggressive portfolio. I have this portfolio channel set up, but I haven't made any calls in it yet. Thanks for bringing that up. That is something that you do get. I haven't mentioned it because I haven't called anything in there yet, but I do have this aggressive speculative portfolio, right? Speculative growth portfolio, it's called. And there's basically a group of stocks that I'm interested in investing in, but I've been very hesitant. I haven't placed any orders or any trades or anything in there because I just don't like the market environment. I don't trust it at all. Because when you're investing, you want to invest at lows, not at highs. And this market is just it's very strange what's going on here. And since the stocks that I'm looking at are typically small caps, this is not a good time for them. Okay. Even though if you look at the Russell 2000, what are you talking about? This thing's making new highs. I don't buy highs. All right. And the stocks that I'm looking at are like high growth stocks. And the time horizon is like a year or 2 years or 3 years. I don't want to buy at a cycle high and then have everyone sit and take pain for like 6 months. It's ridiculous. Right. So that's why I've been quiet on. But thank you, Isaac, for bringing that up. I am planning to populate that channel. I just don't trade for the sake of putting on trades, or even when it comes to investing. I don't do that. Anyway, any questions about how to make a purchase, or if you're interested in the training program? Again, this is a pretty valuable thing. All right. Again, I've never opened up this training program to monthly subscribers. So that's an important consideration. And there we are with that. So let me just go back here to my slides. Any questions, guys? Now would be a good time. Ask anything. This is the site you go to, right? To make the purchase. Let me know if you have any questions. Any questions about the presentation? So you're Izzy, you have a question about prop firms. I'll just address that real quick. So prop firms, for people that don't know, prop firms are typically Forex firms, and they provide an important service. They give you access to capital that you can trade in the markets, right? And you have to take a test to get to this capital. So typically, you can buy you can buy access to a $50,000 account, $100,000 account, $200,000 account, and it gets as ridiculous as a $10 million account. I've seen someone promote that. Okay, and you take a test, and they tell you all this stuff that they're going to support you and blah 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 and blah blah blah. Look at the statistics about who gets through those tests. I have a very low opinion of all these firms. In fact, I carefully researched a few of them, and the reason why I had done that is because I have a managed account thing where I manage money, and I'm like, oh great, I have a system that works. I like this system. I'm comfortable with it. I'm going to go to a prop firm, and I'm gonna take a test, and then I'll run my system on a $300,000 account. That'll be great, right? That was my plan. So then I start looking at the criteria of these things. My system, which is a profitable system, would not be accepted by any of these firms because of all these ridiculous little rules they have. Okay. So I realized, I'm like, if these prop firms are truly out for their customer to win, some of these rules are specifically here for you not to win. Of course, because it's in their best interest for you to lose. Their greatest risk is you winning. So they don't want winning systems. Okay. So what they're hoping for are randomly winning systems, not consistently winning systems. Consistently winning systems are a problem for them because it's going to cost them money, right? Randomly, hey, it's like a casino. People win at casinos too. So yeah, I'm not going to say much more than that, but I have a very low opinion of prop firms because I have not found one that my system would be compatible with. And when I'm looking at the rules, you would think, oh, because you must take really big risks, right? No, it's the opposite, actually. It's because the probability of coming out ahead is very high, and it's not compatible. It's not the risk part, because I got the risk part pretty well taken care of. Although there was one I came across that had some ridiculous risk parameters. I mean, ridiculous, completely unrealistic. Very, very. In order to win in a situation like that, basically you need an algo. You definitely need a robot to do this for you, because it's just not practical. From the ones that I saw. Now, I haven't evaluated every prop firm, but I've evaluated a number of them, and they all seem to have the same types of parameters and things in place that prevent a system like mine. Otherwise, I would have went for one of them. Okay. Anyway, I have not yet heard about prop firms, but my first thought is they trade AB book and no retail traders. Well, Kai, actually, prop firms, let's just say they're a middleman of the middleman. Okay. And basically they're 100% betting against you. So I'll just put it that way. There's absolutely no reason for them to want you to win. The conflict of interest is huge. They're worse than Forex dealers. They're worse. They're like a Forex dealer on top of the Forex dealer. So, and they're not regulated. I got a lot of problems with them. So, but if you research them and you read the fine print, you'll see what I'm talking about. Anyway, I do want to make some more informational videos about prop firms. The thing is, people are not going to appreciate what I have to say. It's not going to be appreciated. It's not going to be very well liked about what I have to say, especially the prop firms. They're not going to be happy. All right. But look, we're talking about the truth here. And I consider myself the retail trader advocate. I want to see you guys thrive. I am not on the other side of your trades. It is not in my best interest for you to lose. In fact, I want to see people at least protect themselves, if anything. Okay. I think that's the best I can do, is help you learn how the business works so that you can be better prepared to protect yourself in the most deceptive business in the world. If you can do that properly, then eventually you can learn to grow your account, because this game is primarily about risk. It's not about making money. If you can get the risk part figured out and take risks that make sense and look at things from a probability perspective, you have a much better chance of growing your account. And when I say growing your account, I'm not talking about, oh, I'm going to be a billionaire by tomorrow nonsense. These TikTokers with their fake Lamborghini nonsense. I'm not talking about that. And I hope you don't get sucked into that either, because I'm telling you, this game is worse than used car dealers. Really, it really is. All right. I mean, so there are so many frauds. Everyone is lying. All right. Just go back to efficient markets in the beginning, like I talked about. Most people, they're not making money in the markets. All right. They're not. They're actually making money from their subscribers or ad revenue from ads that are running on their videos. That's how they're making money. They don't make money from their trades. They can make money randomly from their trades, and that's what they'll show you on their phone. Oh, I made a trade on my phone. Look, I'm up $10 million on this trade. Took only 5 minutes. I am amazing, right? They show nonsense like that, and people are like, oh, I got to buy this system now. It's nonsense, especially when they show that nonsense. Okay. Anyway, right, Dom. Well, it's not that. The truth is not the truth. Retail traders want to be lied to. They want to believe in this dream. There's this lie, right? This is lie that's baked into everything, and people want to believe that, and that's what drives the whole business. I got sucked into that lie too for many, many years, and then I realized one day there's something wrong here, and then I eventually was able to uncover the lie. All right, but we all get sucked into the lie. That's why we come here to begin with, because we think we're going to make money pressing buttons. We don't realize what this game is really about. And there's no one out there to tell us what this game is really about, especially people that are trying to sell something. Now, you can say to me, hey, you're trying to sell something too. Look, you're putting a sales link as you're saying this, right? You got sell nerve. Well, I am trying to provide value, and I would like to get something for the value that I provide. Yes, but I am genuinely trying to be as transparent and honest as possible so that you guys can make better choices and at least understand the nature of what you're getting into. Okay. I wish someone would have told me these things. I would have saved myself many years, and probably I'd have more here. All right, you guys, I don't see any questions. You guys have any questions? Okay. I don't see any questions. So you guys, I hope you got some value out of this stream. I hope you found it helpful. If you'd like to know more, again, there are links in the description. If you'd like to sign up for my training program or anything else, become a member of my community, join the Discord community. There's a lot of value there, and I have a lot of improvements on the way. I would love to see you. If you have any other questions, feel free to reach out. You can email me at mark@markpmarkets. You can see that here on my screen. You can email me there. Okay, I'd be happy to answer your questions. That's usually the better place to email me, because you know that if I respond, that it's me. All right, you guys. So other than that, enjoy the rest of your day. Enjoy the rest of your evening, wherever you are in the world. And thank you very much for watching.